Hi, welcome to the next lecture of Financial Statement Fundamentals. How to understand the story of any business at any time. This lecture is titled Financial Statements. What are they? So, what are the financial statements exactly? What they are is they're summaries. They turn vast amounts of business activity into 3 brief reports. And they're the statements we talked about earlier. They transform every single business action over a set period or at a set point in time into quantifiable financial representations. And when you summarize this behavior, it allows anyone that gets hold of the financial statements to take a bird's eye view into this activity and action in a matter of minutes. So in short, they're summaries of business activity represented in financial documents. Another way of looking at it is that they're outputs of financial accounting systems. The 3 statements are the outputs of financial accounting systems. They're reports generated by your accounting software, whether that's small business Intuit software, QuickBooks, or Xero, or MYOB here in Australia, or even larger scale ERP systems for larger businesses. They're the outputs of those particular accounting software. All they really are is statements, in other words, spreadsheets or reports that list accounts and attached financial values to these accounts. Now, these accounts are like accounting categories, but not exactly accounting categories. That's just a way of explaining it for the time being. And these accounting categories run down the left-hand side of the financial statements of each individual financial statement. And the respective financial values of particular accounts run parallel down the right-hand side. So you've got the accounts, the categories on the left-hand side, and their respective values down the right-hand side. Now later on, we'll come to some specific examples. If you want to jump ahead now and download example financial statements that have been attached, go ahead. Nothing's stopping you. Okay, now I talked about the outputs of financial accounting systems. So what exactly are financial accounting reports? Now, financial accounting reports are in contrast to management accounting reports. And the financial accounting reports are driven by external stakeholder decision needs. So people external to the organization, such as investors or creditors or governments like tax authorities or NGOs or consumer groups or unions, they need to make decisions about particular businesses, about whether to do certain things or not do certain things. And their needs drive the production of financial accounting reports. Now, financial accounting reports emphasize reliability over relevance. Reliability as in they have to be accurate. They have to be as accurate as possible instead of more relevant or timely or useful. Reliability is key. These reports often require auditing by registered auditors like the Big Four accounting firms. And they're they are generated by a set of specific rules, or GAAP, Generally Accepted Accounting Principles. Now, Generally Accepted Accounting Principles, or GAAP, or GAAP, is a term given to respective rules in particular countries. So there's USA GAAP, or UK GAAP, or in my case, Australian GAAP. Although you will find that there's an international harmonization of these particular rules. Now, on the flip side, as opposed to financial accounting reports, there are management accounting reports. Now, overall, this is just some background accounting information, the distinction between financial accounting and management accounting. It's one of the first things you'll learn if you're studying accounting, and it'll carry you through a long while. Now, management accounting reports, the other side of the coin, are driven by internal to stakeholder decision needs. So those people inside the organizations, people like CEOs or general managers or floor managers or anyone inside the organization that has to make decisions using financial information. Scratch that. Some are management accounting reports. I don't want to make it too complicated for the time being, but some management accounting reports use other information other than financial information. They could use marketing information or production information, but generally, they're reports that allow internal stakeholders to make decisions. Now, management accounting reports emphasize relevance over reliability. So while financial accounting is reliability over relevance, management accounting is the mirror. They prefer relevance. They prefer things like usefulness and timeliness rather than specifically accuracy. Sometimes it's better to make a quick decision and a good decision rather than be sure that all the numbers are 100% accurate and have to wait for that information when it may not be very timely. It may be out of date by the time it becomes accurate, and then you can't make the good decision. Management accounting reports aren't audited. You don't have to prove your results to any external parties. It's simply for internal purposes. Now, when I say you don't have to prove that they're correct, obviously you want them to be as reliable as possible, but you don't have to verify it for an external party or by an external party. And they're generated by custom design. There's no gap. There's no generally accepted accounting principles. Whatever the internal organization wants, and however they want to present their management accounting reports, more power to them. They can present them however they like. They can design these reports whatever fits their needs. It's whatever suits them. Now, when we talk about the three financial statements, the three universal financial statements, they are financial accounting reports. They're generally driven by external decision-making needs. However, or should I say, but, when it comes to the three universal financial statements, the immense utility generated by the common language that runs throughout and their availability, in other words, any person can pick up any financial statement and have the same rules running throughout. They're quite common, they're easy to get access to, the ease of comprehension and use, the ability to quickly understand them as you're only beginning to understand them now, and their ability to still tell a story, even though they're not specific management accounting, means or results in that the financial statements are often being used by those internally, like other management accounting reports. And overall, that's what the financial statements are.